What up, guys? Hope everything's going well. I want to do this video on crude oil and the Canadian dollar. Normally, at this time, I would be watching football, but the protests taking away from the game, and right now I don't want to watch it. And I've talked about that in my previous video. But crude oil and the Canadian dollar. Earlier this summer, I talked about how crude oil should rally. One of the reasons why I thought crude oil would rally was the positioning sizes of the Canadian dollar. And we've never seen this many longs in the Canadian dollar. And what happened next? Canadian dollar has rallied over 1,000 pips. I mean, I'm looking at the futures contract, so it's not 1,000 pips, but it went from like 72 to 82 at one point. And too bad I only made a short-term trade with the Canadian dollar. If I were patient enough, I could have made freaking $6,000 to $8,000 on that trade. But I did profit off my oil spread positions when it was hitting $42, $43 a barrel earlier this year, and I just basically sold out of the money puts because based on what I saw, oil would rally, and oil did rally. And in an interview I did with John from the J22 report, I said that oil would go no higher than $55 a barrel. It's hit close to $52 a barrel, but now I think it's time to not buy oil at this point. Just because I'm saying don't people should be cautious in buying oil doesn't mean that it won't go higher. All I'm just saying is, in terms of price ranges of oil, I think you could still see that $45 to $55 range. And I wanted to look at the Canadian dollar right now. And why do I want to look at the Canadian dollar? And I wrote this in an article in Seeking Alpha, my first article. There's a correlation between the Canadian dollar and crude oil. And what happens is these two markets are interrelated. And people say, why are they interrelated? Well, they could be interrelated because the Canadian economy exports a lot of oil. So when you see the Canadian dollar appreciating against the US dollar, that should be bullish for oil. And there was a price divergence between the Canadian currency and oil earlier this year. You saw the Canadian dollar rising, but you didn't see any action whatsoever, and oil is actually going down. But then oil eventually caught back up, and then the Canadian central bank was announcing a few measures, right? And then you just saw a short squeeze in it. It was just weird. It was just an excuse to go higher. Now, where are we? The positioning size for the Canadian dollar, it went from like plus 100,000 contracts from the commercials, the smart money, and now they're almost net negative 100,000 contracts. It's maybe like 96,000 contracts. And I looked at the data for the last 20, 25 years, and they are the most net. I mean, they're not the most net short, but the most net short was like 138,000 contracts. And what they're at right now, negative 96,000 contracts. So looking at inter-market relationship, we don't even need to look at crude. In my opinion, it does not make sense to buy oil at this point. And what I've done, I think I did it a few weeks ago. I was selling out of the money calls. I was hedged. So I was selling like 55 calls in the futures, and then I was buying like a 60 call to hedge myself. And then I think I did another position. I sold a 57 and a half call, and I hedged myself with that as well. When I say hedged, I bought like a 62 call. So what I'm betting is the price of oil will not go higher than 55 and 57 within the next few months. Hopefully I'm right, and then I can profit off of that. In addition, I wanted to also look at the commitment of traders for crude oil. Crude oil right now, they're negative, 440,000 contracts. I'm only looking at the futures. I'm not looking at futures and options. If you look at futures and options, they're over 500,000 contracts net short, the commercial money, the smart money. And one other interesting note out of this, open interest is at the highest it's been, or really close to it. And there are two numbers you could look at. You could look at the futures market. You could look at 2.4 million contracts right now, if I'm not mistaken. And then if you want to look at futures and options, it's more than 3 million contracts. So what I'm trying to say is open interest is going up. Who's the buying coming from? Most likely coming from the speculators, right? The dumb money. While commercials are going net short or adding to their short position. They got rid of their short positions earlier this year, which I was talking about, right? Close to summer. And now summer is winding down. And in addition to that, you see the Canadian positioning sizes. So what are these smart money guys doing? They're betting that oil will correct. Now, one bullish aspect for crude oil, I remember going through the oil reports that come on Wednesday, and I noticed that the demand of crude, right, it was still slightly higher. I believe it was 1.5% higher, the EIA numbers. So if they're saying that there is higher demand, well, that could help the bulls out. But long story short, I look at what the smart money is doing. I don't care about speculating on a day-to-day basis, even though I do have positions that are a bit more aggressive. But in terms of crude oil, I'm just doing these spread positions and betting that oil is going to hit the $45 to $47 range. But hey, if other information comes out that is totally against what I'm feeling right now, I will change my mind. But at this point, I feel that crude oil is going to go lower, Canadian dollar is going to go lower as well. I'm talking about the Canadian dollar futures contract. But anyways, guys, let me know what you think. And also wanted to finish up on gold. Right, gold has corrected from 1360, 1370 to what? Right now, 1278 last time I checked. And I did a video a few weeks ago saying that I felt gold would correct. And I got it to the day. I didn't write that Seeking Alpha article until that Monday afterwards. You could even see the video that I was talking about. And you could see the article. I was absolutely correct on that. Now, you get gold going maybe to like 1260, 1255. That may interest me, right? You see volatility very low. It's 9.5. The VXST, the short-term volatility, because VIX is 30-day volatility. That volatility index, the VXST, is below 8. So the next 8 days is very, very complacent. And when you see that, you see a mean reversion move. When you see mean reversion move, what happens, right? You see the unwinding of dollar yen, gold goes higher. So that's what I'm looking at right now. So gold corrects a little bit more. That would be pretty interesting for me to maybe go long, maybe in the Nadex spreads. I don't know how many of you trade Nadex or gold spread positions in the futures markets, something like that. But anyways, guys, let me know what you think. Talk to you later. Bye.